Hey guys, welcome back to the channel. I hope everyone is doing well. So today I thought it might be fun to kind of think through like what could happen in the future. So this is just a thought experiment, just based on what's happened so far. So, take it with a grain of salt. So I was wondering what could be next in high yield land. It might be expensive, but I think there's still like a sufficient amount of investors that are willing to pay, you know, what I consider to be expensive expense ratios of like 1% or more for double-sided super funds. And just as a matter of disclosure, I still own some high-yield option ETFs. And the current situation is that YieldMax and YMAG have been out for a few months, and like Current Invest is going to come out with their kind of like their like a mini version of theirs too. And of course, like right now we have CRSH, and eventually, I guess when they have enough short ETFs or inverse ETFs, that could lead to maybe something called Wyman. Jay Presticelli from YieldMax is kind of, or I guess like from YieldMax slash Defiance slash Zega Financial, he kind of hinted in previous interviews that Wyman could be like a thing that could happen in the future. I'm assuming that there'll be enough demand for it. The thing with these, even with like these YMAX, YMAG, and all these inverse ETFs, you need to still like constantly monitor them though. So they're not like it'll perfectly offset each other. And one important thing that people need to consider is like, do you want delta neutral? Ask yourself if you want to like fully hedge. And in practice, this is very difficult for smaller retail investors to do themselves. So I think that like for the little guys, I think people like even though they'll be expensive, I think people will be willing to pay for it, at least just to see like what could happen. So I'm thinking in the future they might actually come out with like a fund of funds, and then, like that's a mouthful, and it might seem kind of ridiculous and without any context, but it might happen. So like for example, if right now they have a YMAX, and in the future they might have a YMIN. So if you put them both together, like they may balance each other out in terms of having like long and short exposure. So like just off the top of my head, I'm just thinking like they might come up with like why not, just to be cute, but I'm kind of cautious and like nervous about like what the expense ratios would be for like something like a why not, meaning you have like you basically have like a hedge fund of funds at that point, and it probably won't be cheap. So I'm thinking it might be closer to like 1.5% in terms of expense ratio, maybe even higher. So if of course like they do decide to go with it, and then of course like since you have already a high volatility ETF or like a ETF that wants to take advantage of like high volatility products, thinking like the next thing that they might want to come up with, because I'm sure like other investors have had this thought too, because right now OT hasn't performed as how I expected. So there might be a demand for something called SHTY. I'm gonna be nice and say it might stand for shorty, just to be cute, but it could easily stand for something else. I'll let you guys figure it out. So I guess like a short version of OT wouldn't be like the worst thing in the world, because well, I guess with high volatility stocks or ETFs, they'll naturally have like a high volatility that I guess like when things go south, it could kind of complement each other. So I'm thinking that that could be one way to go. And just to kind of like review why I think people might think this way. So I did a video recently regarding like if CRSH might be a good hedge for TSLY, and I've kind of made my case for, I guess like trying to figure out like the best amount of like shares of like CRSH to hedge like a certain amount of TSLY, and it actually turned out to be more complicated than I originally thought, because eventually I came up with kind of like one of the methods to kind of do it is do a kind of like a proportion, and then you have to look at like the deltas from like TSLY LY and the deltas from CRSH. Then you have to figure out like how many contracts there are, and then you have to figure out like your share of like the amount of like shares outstanding. And you know what? Like a lot of people, I don't think they're gonna want to do this kind of work. Even though I think you should, but like in reality, let's say you're working like a regular job, and then you might have a side gig. The last thing you probably want to do is like do all this crazy stuff on your own, because it can get pretty convoluted pretty quickly. So I guess like for those folks, like a big super ETF might be the way to go if YieldMax decides to do these type of products. Because then the next thing like that you might think might be helpful would be like a dynamic hedging like super fund. So then you have like OLT plus SHTY plus whatever they decide to come up with, and then like that could be like HDGY. So I'm thinking maybe like Hedgy, for those that might be interested. But I don't know, it could be too much, but it's something that it could happen. So kind of preparing ourselves mentally for that could be helpful. And in terms of like determining whether like these funds might be good collateral or not, I like to use like the Schwab pledge asset line, just to kind of see how much in case in the future you want to maybe take some money out to maybe do like a home renovation, or maybe even just like as a down payment on like a like a big purchase, maybe like a rental property, or you want to diversify into something else. This could be a way to kind of gauge what the quality of like the ETFs as collateral. So right now, YMAX is the only one that you can kind of borrow against, and even then, like you can only borrow like 50% of the value, and then maybe eventually, I guess like if there's a long enough track record for YMAX, because so far like it has, it's not too bad. It's clinging closer to like the $20 mark rather than like like $10 or below. So there is something to be said for like the diversification within YMAX. Unfortunately, YMAG and OLT, so far they're not eligible, and I don't even know if they will be. I think maybe YMAG might stand a better chance, but you have to kind of keep checking up on this. So of course, like this is just like about paying an opinion, and this is more for like fun, because obviously I don't know what YieldMax is thinking. I don't know what a Jay and maybe Sylvia, or like what they're doing in the meetings and stuff. So just to stay on top of your investment and your hedges, just in case they don't come up with this type of stuff. If you like this type of content, please consider giving this a like and subscribe if you can. Of course, super thanks are greatly appreciated. And I'll try to get to everybody's requests and topics as soon as I can. So thank you for watching, and I hope you have a great day, and please make some good money out there.